Hi everyone and welcome to today's morning report on Friday the 26th of September with me, Richard Perry, market analyst at Handtech Markets. The European session started fairly disappointingly again, and that's come after the selling pressure resumed in the States. Wall Street lower by quite a considerable amount actually. The S&P 500 1.6% down on the day, certainly not helped by the technical pressures on Apple at the moment, both software and hardware glitches, and the shares being hit by 4%. I think Apple's around about 2 or 3% of the S&P 500, so significant weighting there, dragging the S&P lower. But general Wall Street concern over the fact that there is a potential for Russian courts to seize foreign assets, and that is certainly ramping up the potential counter sanctions that Russia could put on the rest of the Western world, and how that's going to be impacting the market. Certainly negativity. Climbing in the US session. The big move that we saw was on the VIX index, VIX volatility spiking 17% higher, almost 18% higher on that VIX index, up towards 15.5. So a real significant increase in volatility, certainly suggesting that portfolio fund managers are looking to try and get some sort of insurance for their long funds, and it looks like that is how what is driving this VIX move. But certainly the S&P 500 weakness drifting into the Asian markets as well. Asian markets all lower. Nikkei just underneath a percentage point lower on the day, and that's again drifted into the European session as well. In terms of currencies, the dollar remains strong, just slightly higher on the day. 0.05, so almost 1/10% higher, so nothing too significant, but still it is remaining strong against the major currencies. And what we've had is a slight move into safe havens across the board. Pretty much US Treasury is benefiting, gilts also benefiting. Gold is also finding a bit of support in this flight towards safe havens as well. So that is what we're seeing today. But in terms of our economic readings out today, nothing too significant. Basically just tying up a few loose ends really. You got the final readings for both Q2 GDP forecast to come in at 4.6%, slightly above that 4.2% annualized reading of the last reading. And also the final University of Michigan sentiment at 245, so that's wrong on that index. Sorry, on that reading. Sorry, but 255 is that time for the University of Michigan sentiment, and that's expected to improve very slightly to 8.8 on that reading in the final reading. So takes me to my chart today, and as I said, equity markets are under significant pressure at the moment. And we've got the DAX that has now completed a big top pattern. That double top there that we've got in place gives us an implied downside target, a minimum downside target 40 of 94.27, but potentially a maximum downside target if you actually take it from the peak of the second peak. Therefore, that gives us a downside projection of 93.20. Now, that big move below the key pivot level support at 9600, I think, is a really important move. But also, you've also had yesterday a bearish outside day, a sharp reversal on the trading day. I think that certainly suggests that the bears are gaining control of these European markets. You've got the RSI that confirms that deterioration falling away. Also, we've had a bearish crossover on the MACD lines, and stochastics are also looking pretty disappointing as well. So I think just generally momentum is ramping up to the downside on certainly the DAX, and that 9600 becomes the new resistance. That neckline, this is on the hourly chart, that neckline around that 9600 mark becomes that new resistance. And I think chances are we're probably now going to be coming back towards a retest of this reaction low in the move higher at 93.69. And any sort of rebound, I think, is probably going to be looked upon as a chance to sell now on the DAX, because I think these indicators are looking pretty bearish, certainly near term anyway, on the DAX for a retest of at least that 93.69. And what we've seen yesterday is actually the Fibonacci, the 50% Fibonacci retracement of that big correction, still providing a bit of support. So I think a consistent move below 94.77 would then reopen as well that 38.2% Fibonacci level of 93.41. So some downside targets there on the DAX, and certainly I think these momentum indicators suggesting further weakness. Anyway, I wish you good luck in your trading on the DAX today and whatever you're doing, and I'll speak to you later. Thank you.